While the European and US markets are panicking over inflation and geopolitical chaos, global wealth is quietly flooding into one specific country. In this video, we are looking at the top 10 stocks on the Straits Times Index and exactly why Singapore is the ultimate Asian safe haven right now. Hello everyone, and welcome back to the channel. We are continuing our global market series, and today we are looking at the top 10 performing stocks on the Singapore STI for March 2026. With the index recently crossing historic highs, smart money is using Singapore to build a bulletproof portfolio. Let's count down the top 10 winners. We are going to group numbers 10 through 6 because they represent the absolute bedrock of the Singapore economy. Coming in at number 10 is telecom giant Singtel, down slightly by 1%, followed by marine engineering firm Seatrium and UOB Bank, both completely flat at 0%. Breaking into the green, we have DBS Group up 1% and OCBC Bank up 4%. Now, these aren't massive double-digit gains, but that is exactly the point. In a month where global markets crashed, breaking even or gaining 4% is a massive victory. Singapore's banking trio makes up almost half of the entire index. With inflation keeping global interest rates higher for longer, these banks are locking in massive net interest margins. They are the ultimate safe haven where billionaires are currently parking their cash. Numbers 5 and 4, the Consumer Commodity Hedge. Moving into the heavy hitters. At number 5, we have DFI Retail Group up 6%. And at number 4, Wilmar International surging 9%. Why are they moving? Wilmar is the ultimate geopolitical hedge. With the Middle East conflict pushing oil prices back over $100 a barrel, agricultural commodities always surge in tandem, allowing Wilmar to print cash. Meanwhile, DFI Retail, which owns brands like Guardian, Mannings and 7-Eleven, just reported a massive 35% jump in underlying profit. They are dominating the health and convenience sectors, and they just rewarded shareholders by hiking their dividend payout ratio to a massive 70%. Number 3, the house always wins. At number 3, we have the exchange itself. Singapore Exchange, SGX Group, ripping higher by 10%. We have seen this trend across all of our global videos. When the world panics, trading volume explodes. But SGX is unique. They aren't just seeing panic selling. They just reported record-breaking exchange-traded fund, ETF, turnover. Global investors are aggressively buying into Singapore, and the SGX collects a fee on every single one of those trades. Numbers 2 and 1, the energy and defense kings. And finally, the top 2 performing stocks on the Straits Times Index for March 2026. At number 2, we have energy giant Sembcorp Industries, up 10%. And taking the number 1 spot is aerospace and defense contractor ST Engineering, up a massive 11%. The catalysts here are undeniable. Sembcorp is surging because of the massive spike in global energy prices, combined with their aggressive push into hydrogen-ready power plants. But ST Engineering is the real star. While defense contractors in Europe are struggling with supply chain bottlenecks, ST Engineering just posted record contract wins and order backlogs. As global defense budgets expand rapidly in 2026, they have proven they can actually deliver the hardware, making them the absolute king of the STI this month. So, the next time the financial media tells you to panic, look at where the smart money is actually flowing. Singapore is proving that strong banks, energy independence, and defense contracts are the ultimate recipe for wealth preservation. If you found this breakdown helpful, hit that like button, subscribe to the channel, and let us know in the comments. Are you adding any Singaporean blue chips to your portfolio this month? Thanks for watching, and see you in the next video.